All right, my friends. All right. Welcome to the Destined Trader channel, where we are going to go over some gorgeous follow-ups today. I know, my friends. You've been waiting. We've been just doing some car conversations, talking about a little bit of scalping lately, talking about some different things that are going on with how we view the markets and stuff. But today we're coming back to the price, back what everybody loves, looking at the price of stuff, looking at the chart, seeing what's going on, getting a little formulation. Today is not so much, I have one position that I entered in today. I'll talk about it. But today is more talking about what happened in the past and where we're at now. My good friends, the S&P, it's so funny how some trades can just be so good. And the reason that the S&P is a perfect example. It's a perfect example of why experienced investors and traders just make so much more money than any job you could ever have. Okay, it's just ridiculous when you get to that point of understanding opportunities when the market presents itself. Okay, case in point, back in, what was this date? About April the 3rd, April the 4th. If you remember, my friends, it was just fortunate. It wasn't like, oh yeah, I was there. We were there. We just so happened to be watching the market that day. As you should. You should, somewhat pay attention every day. And we were following it that day, and the S&P, it just was everything on the news, the internet, bear market, stock market going down, horrific, doom and gloom, okay? And that very day, I just said, this is a nice opportunity. It looks to be a lot of pain. I'm going to go ahead. I'm already buying the S&P at a 20% discount. So we took a buy at 5,000. And now, fast forward a little bit, we had drawn out some formulations of what could happen. And funny how that worked, isn't it? Price went up, came back down a little bit. I made another video saying, look, personally, just me, if it stays above 5,000, I'm going to hold it. Because there's no reason why it can't make another high, or at least get up to 6,000 again. But the S&P just took everybody by surprise. A lot of times when price has that quick dip, okay, it's going to recover fast because it wants people to be chasing. Okay, it's not going to be at a discount forever. That's what I'm saying. When you get that experience behind you, you understand that those hard dip opportunities, they don't last long. And it's difficult to understand that until you start being able to have cash on the side. Most, myself included, for much of my trading career, not have cash on the side, always be trading something, always be invested in something. You've got to have cash on the side to buy opportunities like this. So the S&P just did a beautiful number. Now remember, over here was our high, 61.47. Okay, that was the quote-unquote all-time high back in February, March. And then, boom, we had that big drop down to just below 5,000. We bought at 5,000, and we just held it. And we exited early, but that's okay. We exited at about 5,800. That little line there, that was our idea. You know, I wasn't looking to get an all-time high. I was just looking to recover most of that 20% drop that we had. And we exited. And look what it did after we exited. It continued up to 62.15. It hit 62.15 yesterday on Monday. It made another all-time high. So it's not, oh, well, should I buy today? You do what you want. I bought at 5,000 and I sold at 58.88. I'm happy. But the only reason that I was able to, it could have very well gone down to zero for all I know. But I've just seen it so many times in the past of something pulling back 20% and then continuing up to either make another high or at least recover most of that 20% drop. And the S&P paid beautifully on that. You know, the S&P, hands down, that was our cleanest trade of 2025. Because on the S&P, there was no drawdown on our trade. We were in a drawdown for 2 days. Now, it took over a month to play out. But the only time we were in a drawdown was the first 2 days we were bouncing slightly below 5K. But it never, even this pullback here, that little pullback there, it only went to 5,100. It never dropped below 5,000. So, man, shout out to S&P. That was the best trade of this year. It was clean, smooth, easy game plan. Buy at 5,000. As long as it stays above 5,000, we hold it. We held it. Closed at 58.88. It was gorgeous. And it even gave you more if you're still holding it. Now, you already made another high. So you had a previous high back here, January, February. And now, you have a new high. So, you know, I'm not doing anything. I tell you what, I'm not going to short the S&P. I've talked about that in the last video. That's the last thing that you'll catch me doing. I would never like to short the S&P. I don't care if it goes down. Because the S&P is one of the stronger baskets that you can purchase. Okay. Because what is it, like 500 companies? 500 good performing companies? They're not going to have garbage. Your company, if it's garbage company not making no money, it's not going to be included in the S&P market. Okay? So that just kind of goes to show the S&P is something in the future to buy. So in the future, I can formulate a plan on the S&P. Okay, maybe, who knows, 2, 3, 4, 5 years down the road, we're at 7,500, 8,200, and it pulls down to 5,800. I'll take another buy at 5,800 and ride it up to 7K. You know, it kind of seems that's the S&P's deal over its lifetime. But the S&P was absolutely gorgeous. Another beautiful trade we had this year was CHEWY. Look at that gorgeousness on CHEWY. Check this out. You see all this madness, all these madness scribbles that we had made on our CHEWY video? And how we were just like, look, if it holds that trend, we're going to hold it. We're going to buy at 32, 33. with a high probability of it getting above 40 again. And look what it gave us. The reason I bought CHEWY was, number one, when I bought CHEWY when I did, was that weekly trend. Generically drawn trend line, nothing fancy. You don't have to be perfect with your technical analysis. This is like a video, this is proof. Legitimate proof that when you are, this isn't talking about leverage trading, this isn't talking about the futures market, okay? When you are just buying and selling stocks, you don't have to be perfect. That's called spot trading. You don't have to be perfect on your technical analysis, okay? You're not trying to trade the 1 minute, every little maneuver that it makes, okay? You just have to get a general consensus. And look at that garbage looking trend line we drew. So we bought here at 33, and our plan was, if it makes another high, we're out. $40, we're out. And it went beyond that. Price moved up. Oh, we got out here at $40, right where our little squiggly was. But look how it gave you so much more. But this is the time to see, we exited here at 40, okay? So we made like 18% on this trade. 18% in 1 month. Your bank ain't gonna give you that. That's why I'm in this. Because I know that the markets, learning how the markets operate and getting a craft down in the markets is the best way for me to make a substantial amount of money in order to start working on other ways to make money, okay? So 18%, we were out. It gave you so much more. It went all the way up to $48. So I could look back and I could say, why did I set my take profit at $40? I could have got all the way up to 48. I could have made 27% instead of 18%. That wasn't the game plan. I didn't know it was going to go up any farther than that. I didn't even know it was going to go up to here. I just had the probability of it bouncing off that weekly trend and most likely going to make another higher high. And I took it and got paid. It was gorgeous. But CHEWY, absolute thing of beauty. CHEWY now, to me, it's just, now you're kind of waiting to see if it comes back to this weekly trend line down here, 36, 38, see what it's going to do. But those are two positions, two trades that worked out absolutely gorgeous in our favor this year. I mean, it was a thing of beauty. I'm not buying S&P. I'm not buying CHEWY. I'm out. I'm done. The trades, they were done, closed a month ago. But that was just, look for those weekly trends and look for something to have a nice, healthy pullback. Now, here's something that I'm looking to get in today. We'll talk about Tesla tomorrow. But Target, okay? Target, zoom out on Target, zoom out. This is the quarterly, this is very zoomed out chart here, okay? Each candle represents like 4 months of price action, okay? Or 3 months of price action, I'm sorry. Notice how here on Target, we had a little pullback to 94, then it come back up. It came back up to about 170, and now we're pulled back down here to just below 100 again. But notice this little quarterly trend here. Generically drawn trend, okay? It's still there. It's been there. It's been on my screen, saved in my Webull app for months now. And it's still holding that big trend. And now that I have this slight pivot point here, I'm not looking to get an all-time high again of 240. But this little 170 pivot point here, price to me is kind of looking like it wants to bounce off this quarterly trend and at the very least take out that pivot point right there. So my formulation today on target is taking a buy. We have a low here, a recent low of 86. So if I'm of the belief that the quarterly trend is going to hold, this is my game plan. I'm just speaking out loud. If I'm of the belief that this quarterly trend is going to hold, where am I going to get out? If it drops below 86, I'm out of the trade. 15% loss, 16% loss, okay. So long as it stays above $86, I'm going to hold it until we take out $169, which would be a 69% gain. Do you see what I'm saying? Target right now to me has the potential for the remainder of this year into beginning of next year to be a 69% gain on a single position. Personally, that's favorable probabilities because that's all the market is probabilities. So right now, Target on a spot swing trade has high probabilities for a win in my book and low risk because I only risk, if I put $1,000, I'm going to risk $160 because if it drops below 86, okay, I lost $140, $160. Okay, I'm out of the position. But if I buy $1,000 of Target today and it goes up to 169 and I close it, I just made $690. So right now Target is looking absolute gorgeous. So let's go ahead and do our little squiggly here. We buy today and we hold it until 169 and we exit. That's our exit. And our ouch uncle moment we're getting out is 86. Simple trade, simple plan, nothing fancy. I don't need any indicators, okay? I don't need to pull up all these indicators and looking at all that, okay? Indicators, the more I'm in the market and the more I'm trading, the less indicators I'm using. Okay? Honestly, they got the volume down there at the bottom on Webull app. I don't even want that on there, to be honest with you. I need to see if I can take that off. Because even that means nothing to me. Volume can be construed. Indicators, in my humble opinion, are just misleading factors on what's really going on. What are my winning trades? My winning trades are looking for pivot points and punishing the next pivot point. Okay? I don't want to enter unless somebody's getting hurt. Okay, who got hurt on Target recently? Everybody who was long here. They already got punished the past couple weeks. Okay? So now that there's been a little bit of pain, we've taken all of their money. We've taken all the buyers' money from all the buyers from back in October. We've taken their money now. So all the people that are shorting Target since April, I'm of the belief that we're going to take their money now because we've taken all the long money and we'll take all the short traders' money. That's how the market operates to me and how I envision the market. Because it's like I always say, in order for me to win, everybody has to lose. And the market is greedy. You think you're greedy? Please. I used to think I was greedy. I really did. I used to think I was greedy. I used to think that my trading was greedy. You know, sometimes when I'm scalping with high leverage, I think that's greedy. I don't think like that anymore because I know the market is the one that's truly greedy. Because they punish as many people as possible. They will constantly take the long traders' money and the short traders' money. And in order for me to win, I have to wait for one party to get punished, enter on their pain and suffering, and then exit on the next party's pain and suffering. That's the only way. And that's how a lot of the scalps have been playing out too, you know. Get kind of a zoomed out picture on the 15-minute time frame. Okay, get down on the 1 minute. We're going to punish those 15-minute time frame traders and get paid. It kind of goes hand in hand. But congrats on that S&P and CHEWY trade. S&P, cleanest trade I've had in my career so far. Absolutely gorgeous. I'll get off here. We'll try to do a Tesla video sometime this week. I love everybody, and we'll talk to everybody on the next video. Peace.